This week in the parish of bourses and market structure, EUREX U-turn, Sibbern to head 6 as Yiu goes from HKEX, and the first 23 are US venue gets regulatory go-ahead. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 274. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business, sent daily to your inbox. More details at exchangeinvest.com. Over in bit carnage, crypto folks will see it as a massive win, but I suspect the net end result will still disappoint them. However, in a hardly surprising move, given incoming Trade Secretary Lutnick has said little else but this for months, the Trump administration is eyeing the CFTC for the majority of crypto regulation, planning to weaken the SEC's role. Net, I think this distributes a message of, be careful what you wish for. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. In the big world of legacy exchanges, Euronext have strengthened their position as the leading stock exchange for European tech companies. Tricky part about that is that while it's great that Euronext is leading the European pack, the problem is the USA is an entirely different league, so far ahead that Europe can barely envision how successful the USA is from amidst the imperial red tape of the EU blob. There's a new direction in Warsaw with a multi-year plan. Will the government allow it to come to fruition? GPW Group's new development directions. Here's hoping the Polish capital market can continue to flourish and the GTW can freely develop. It's an interesting plan. Each, the European Association of Clearinghouses, they've underlined the fact that they are pretty much the most efficient industry body around at the moment. Their manifesto, Keys for Efficient and Resilient Capital Markets, is a must-read on the each CCP website. A simple, efficient manifesto, which, like CCPs themselves, reflects an efficient and organised industry association delivering remarkable collateral value to the parish. Elsewhere, the Financial Times bemoans how to end Europe's backwater investment status. Einstein's alleged definition of insanity, doing the same things repeatedly and expecting a different outcome, is perhaps most applicable to the tragedy which is the EU's decade and more failure to deliver any form of capital markets union. Now, with France on the cusp of a truly ugly collapse, it seems semi-inevitable. I'm just not sure what form the collapse will take. Perhaps President Macron will resign and that'll be the end of it. Who knows? But the outlook is AAA Coyote on the ugly ratings. The realpolitik is the EU has squandered any advantage it had. But then again, perhaps with its back to the wall, the blob can finally effect the sort of reforms from Brussels that are pro-business, pro-innovation, pro-prosperity. That said, the tragedy looks to be an unfolding of ever more decline. In South Africa, there's a spirited attempt to launch the ZA capital market against a backdrop of dreadful government leading to a dwindling in South Africa's economic might. Welcome to the Operation Phumelela. LME, London Metals Exchange, Hong Kong Exchange's subsidiary, they say they're going to be hiking fees in 2025 by an average of 4.7%. Not many results this week. One highlight, Athens Exchange, Hellenic Exchanges, their 9-month results. They're up 15.9% at the moment. Total revenue, EBIT, plus 33.7%. Very decent numbers by HKEX and well above the European Union average. Over in new markets, the US regulators have approved the first round-the-clock stock exchange. Dmitry Galanov gets a 2-stage rollout launch plan for 24 exchange approved by the SEC. Deal news this week, SIX, they've invested in OpenBrick, a platform of digital tokenized securities for real estate projects in Spain. Very interesting move from the increasingly dynamic SIX team. And of course, we'll be hearing about the new head of the team in just a moment. Meanwhile, Exchange Invest is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange, July the 5th, 2024. My bestseller, Patrick L. Young, that's me, Capital Market Revolution, was the first breakthrough book in fintech a decade before that word held common currency. It is over 10,000 new words of additional pith, placing the past quarter century in perspective alongside the original text, which has proven remarkably successful through the years. Capital Market Revolution 25th Anniversary Edition is published by Exchange Invest and is now available as an ebook via Amazon Kindle at a ludicrously reasonable price of $9.99, a quarter of the price of the original shorter print book a quarter century ago. While you're waiting for that to download, you can always check out some of our financial insights with moving pictures. You can even watch it live. Our live streams on Tuesdays, 5 o'clock London time, 12 o'clock New York time. The IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Coming this week is going to be highlights of the year in show number 164, part 2. And that, of course, is the sequel to the show that we've just recorded this week, IPO-VID 163, highlights of the year, part 1. Our finance book of the week this week is Multi-Currency Mercantilism, the New International Money Order by Kathleen Tyson. The world is shifting from 80 years of dollar dominance and US hegemony to a pluralist multi-currency mercantilism. Multi-Currency Mercantilism, the New International Monetary Order by Kathleen Tyson, explains why the shift is happening now and explores what the new monetary order may bring. Over in product news, EUREX have done well, a big U-turn. They're planning EU bond futures in 2025 and a boost to the European Community's goals of issuing more centralised debt. ICE, on the other hand, must be hugely flattered. They can still make EUREX do an about turn in just 3 weeks. As we discussed in Exchange Invest issue number 3121, EUREX were unconvinced about the notion of such futures until ICE said they definitely would list them. It would appear vision and management continue to be in short supply within some areas of the DB1 empire, despite their recently refreshing the management team. Elsewhere, Deutsche Börse trumpeted the fact that their cash market has launched a new trading feature with Xetra Midpoint. Back to the future, in other words, as DB1 is launching a dark pool tool they could deploy a decade or more ago, but then some chippy brokers got antsy and the spineless DB1 management essentially throttled their deal with LiquidNet to offer more block matching. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast. In technology news this week, the ASX have announced implementation plan for Release 2 of the Chess project, targeting 2029, another 5 years away, ladies and gentlemen. We had at one stage the thought of running a poll in Exchange Invest on who might believe the ASX can actually deliver to one of their timelines, but then again, giving themselves another 5 years demonstrates how the ASX is now a kind of salary rentier enterprise, where the aim is for the management to get paid as long as possible for delivering as little as possible. Elsewhere, the Indian regulator SEBI, they have introduced a fascinating piece of redundancy. In the event that the National Stock Exchange of India goes down, then the BSE will be expected to pick up the trading slack. In the event the BSE goes down, yes, you've guessed it, NSE are going to be the trading platform when the other is failing. It's an essentially logical concept, SEBI mandating redundancy. When one stock market falls over, the other must replace it. It's not unreasonable, but then again, with SEBI's attention to detail essentially involving governance by diktat, the risks may yet prove considerable. Regulatory news, not a great week for the FCA. They've been slammed by the crowdfunding industry for overregulated. They've been slammed by MPs for overregulating and incompetence. And apparently they've now said they're going to raise the bar when it comes to the naming and shaming of companies. The only thing I worry is presumably it could become illegal to name and shame the incompetence of the FCA, such as the swaggering hubris of the British blob under the current Labour government. Much more exciting news in career paths. SIX have appointed Bjørn Sibbern as their new CEO. After a remarkable transition of the SIX with the acquisition of BME, Just Disselhoff hands over after 7 years the reins of a very different SIX to Bjørn Sibbern. I wish Jos every success in the future, and I'm intrigued to hear of his new Middle Eastern appointment. At the same time, SIX is now in fabulous hands, and I believe Bjørn will drive the company forward more dynamically than ever. This week alone, a Spanish property trading platform has seen a significant investment, as we heard earlier. Well, indeed, a few weeks back, the deal to acquire Aquis really is adding huge additional potential to the SIX enterprise. Good luck to both US and Bjørn. Bjørn, incidentally, was our guest on 2 previous IPO-VIDs, most recently IPO-VID 151, talking about SIX, the Swiss paradigm, and IPO-VID 005, the view from Nasdaq's European HQ, when Bjørn was running Nasdaq in Europe. One major retirement this week, Hong Kong Exchange's Deputy CEO Wilfred Yiu is retiring. That's clearly the final chapter in the succession tale post Charles Lee, which saw Yiu pipped to the CEO role by Bonnie Chan when both were joint COOs. Finally this week, Saturday, November the 30th, marked a big event in Big World, the 150th anniversary of Winston Churchill's birth. He was a man of magnificently pithy quotations amongst many other fine feats. I want to consider 2 for the end of this podcast. Success is not final. Failure is not final. It's the courage to continue that counts. And we make a living by what we get, but we make a life by what we give. And on that mysterious and magnificent note, ladies and gentlemen, thank you for listening to this Exchange Invest Weekly Podcast 274. Join us daily via exchangeinvest.com, or if you've an exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.